Now, I'm going to list the problems first. Let me list all the problems you're facing first and then give you the solutions to those problems. Does that sound fair? I think that sounds fair. Okay. Hey, Kieran from London. Problem. You think you have to be a genius. Most people think they've got to be a genius when it comes to trading. Warren Buffett recently said, actually, a high IQ gets in the way of making money from the markets. And the reason is people overthink things. You really don't have to be a genius. And if you want proof, look at this. This is a headline from today. And I think I got this from the FT. Neil Wood apologized to investors suspending fund. All right. This is a fund manager. This is how bad they are. Please do not look at fund managers and think, oh my God, they're real experts. You know, honestly, the vast majority of, if not virtually all of them, are just, you know, emperor's clothes. All right. It's all it is. It's bullshit. All right. Virtually anybody can learn to do it. Okay. And that's what I want to teach you. And that's what I'm always encouraging more private investors to be their own fund managers. Be their own fund managers if they've got the time and the competence. My job is to create the competence in you. I might not be able to create the time for you, but I'm going to show you how you can reduce the time it takes. But I want you to be your own fund manager because God knows, as I'm going to explain some of the other problems, we've got to overcome a whole bunch of other problems. Now, I've got a master's degree in economics from the world's #1 university. I don't use it for the trading. I'm going to show you the trading around Brexit and the tariffs. I'm not going to bore you with balance of payments issues or interest rate issues or central bank statements because I'm going to show you why I'm not going to bore you with all of that. That is one way to trade and invest if you really like a hard life. Okay, that's one way to do it. That's not the way we're going to do it, okay? One of the other problems is we all need more money. I mean, look, Warren Buffett hasn't retired. I love it when people go on webinars and say, oh, yes, well, you know, I thought I'd give something back. Now that I've retired from making money. Well, George Soros, the hedge fund manager, probably the most famous one in the world, hasn't retired. Nobody retires from making money. We all need to make more money. Why? Well, it might just be a way of keeping score if you're at the top end of the ecosystem of rich people, or if you're just a regular person. It's because look at this. This is, and Kazanov showed me this just yesterday. Okay, and well, that's what I'm going to do in this webinar as well. I'm going to show you the kinds of things that come across my desk. As a fund manager, you get a lot of stuff come across your desk. I'm going to show you some of the best insights that I get. Okay, global GDP since 2008 has gone from where it used to be in the upper 4s and 5% per annum, right down to the higher 2s. Growth has decreased. What does that mean? Well, it means, as most of you know, since 2008, you've not had a pay rise in real terms after inflation. Everybody's finding it harder to make ends meet. Everybody's looking for side hustles. They're looking for side jobs. They're looking to earn a bit more income. Now, what I'm going to say to you is we want to learn these skills. And by learning these skills, okay. Hello, David from South Africa. Sorry about the result today. My fellow countrymen from India have turned South Africa over, I'm afraid. What I want to do is show you the skills you need from somebody who's actually a fund manager, not somebody who's trying to sell you a course or trying to sell you some subscriptions to newsletters or whatever, but somebody who's actually a fund manager. And you might say, well, why do you do this, Alpesh? Well, actually, the content of all these webinars, it's been out for 20 odd years. Because through my books, through my newspaper columns in the Financial Times, my weekly Diary of an Internet Trader column, all I've done is collate all of that information anyway and put it into webinar format. So it's not any extra hard work on me. Thanks for being worried. Okay, but I want to share that because I want more people to be investing. Certainly in most countries, people don't invest. They don't save as much as they should, and they don't invest as much as they should. And if you don't get the market working for you, then what you're going to have to do is work for yourself even harder. All right. So that was just a bigger picture of why we're here. I know why people are here. And that's one of the big problems we're going to overcome with the method we're going to use for trading. Okay. The other problem with trading is most people I speak to, in fact, virtually everybody I speak to, they complicate it so much. Look at this screen. Yeah, they'll be looking at screens like this and their Fibonacci's and Elliott waves and all the rest of it. All right. They're looking for some holy grail. Let me put it in simple terms to you. A coin is right 50-50. God is right 100% of the time. You're going to be somewhere between 5 times out of 10 and 10 times out of 10. So maybe you're going to be right 6 times out of 10. All right, because you're not going to be close to God, and you're probably going to be, hopefully, with a little bit of assistance, a bit better than 5 times out of 10. Yet people think there's some holy grail, let me tell you the secret recipe to being right all the time. You look in the public domain at how often hedge fund managers are right, and it's often 50% of the time. You're probably thinking, well, wait a minute, if you're right 50% of the time, how come you're making money? How come some of these buggers have got billions? And the reason is when we're right, we make a bit more than when we're wrong. And I'll show you the maths behind that so that you can use it in your own trading as well, and you'll learn something. Not only that, one of the other major problems we're going to have to overcome, and I need you guys to overcome, is this. Because there's a lot of bullshit out there. People are still using the old methods like Japanese candlesticks. Love them. You know, they've been around since about the 1700s. Japanese rice farmers invented them. Okay. They've been around since people used to go around in horses and carriages. Okay. In hansom cabs. And people still using them. They're going, oh, yes, well, I see three white soldiers, so I suspect the markets are going to go up. You know what we do now in the age of artificial intelligence? I can look back 20 periods or 500 periods. I can pattern match so quickly in the same way using cloud computing that Microsoft has, tap into a bit of that, the same kind of computing power they use to work out weather forecasts. And those have become a bit more accurate. They're not 100% correct. Okay. My point to you is we're going to have to allow for the fact that technology has moved on. So how can we use some of this technology? But we never want to be paying. Listen, my number one rule, I never, ever, ever want anybody listening to my webinars or reading my newspaper columns or whatever else ever paying for data, all right, or software. I don't want them paying any subscriptions. Are you listening to me? No daily subscriptions, weekly subscriptions, monthly subscriptions, annual subscriptions for data feeds or price feeds or whatever. And the reason for that is these things are now available for free if you know how to manipulate brokers. Look at this. Okay, this is a live chart of the euro, US dollar, 30-minute bars. Each one of these bars is 30 minutes. I'll explain what these green and red arrows are later. Green arrow means to buy. It's when our strategies told us to buy, and I'll share my strategy with you. We've got 10 strategies in the hedge fund. One of them on the algorithms is the one I'm going to share with you, which you can see on screen there. Okay, and the red arrow means to sell. That wasn't a good trade, was it? But that was massive and profitable. Thank you very much. And this is profitable so far. So we're short on euros against the dollar. All right. As you can see there, that's the red arrow. Now, explain how that turns about. Explain what this red line is and what these dotted lines are and all the rest of it and what these other arrows up here mean. My point to you is this. All of this data is live, real time and free. Free forever, live, real time. And it's not dependent on any one broker. There are many brokers and everything from Ripple to currencies to UK stocks, US stocks, Sony, Toyota, UBS, Apple, the whole shebang. All right. You should never be paying a subscription. Why? Because maybe I've just saved you £1,000 a year now. All right. My point is the more subscriptions you pay every day, every week, every month, the less money you've got in your own pockets. My job is to save you money, but also we need to use modern technology to make sure we're not using the same strategies people are trying to teach you about head and shoulders and trend lines and all of that kind of boring stuff. All right. It'll kill you. It'll absolutely kill you. But there's another problem. And I got an email from somebody just today saying to me, Alpesh, I keep getting wrong-footed by the markets. Of course you do. Of course you do. Most private investors, if not all of them, I'd say about 80% of them, don't forget 80% of private investors lose money. 80% of private investors lose money, probably because they've not been on one of my webinars, but they lose money partly because, look, this is what happens. Donald Trump does a tweet. This is what happens to the market. Can you see into his head? So we can't trade that way. We cannot trade in a way where we're trying to guess or gamble or step in front of the market before things happen. Equally, we cannot trade in a way where we're just having to read the bloody newspapers all day long. Because for a start, neither you nor me within our own fund have got enough analysts we can hire to outsmart the market. Okay, trying to guess what's going to happen next with the Trump wars and the tariff wars or with Brexit. Even the bloody experts don't know what's going to happen. The problem with political confusion, as you can see with the FT, is that we're all over the place. So how do we find a way of making money from the markets which allows for the fact that we do not want strategies which involve us trying to second guess and trade before big news announcements, second guess political environments, read every single bloody newspaper? And the answer, by the way, for any of you who are thinking, oh, it must be technical analysis, Alpesh, well, listen to what I just said. It's too dated. Okay, it's too dated, too complicated. So those aren't the answers either. Yet another problem we have to overcome is so many of you are putting too much financial pressure on yourselves. What you're saying is, Alpesh, I need to make a lot of money in the shortest space possible, shortest time frame possible. Hey, yeah, join the queue, my friends. So does everybody else. Okay, what you do is that's not how you can trade. It's not how you can trade. William, I'll send you a link afterwards. It's not how you can trade. I'll tell you what we're going to try and do instead. The most successful traders, and we have to train people up in my office. Initially, when it was just me and my fund manager and my compliance officer, when we started this in 2005, there were 3 of us. Okay. Then we started realizing that, hey, we need to hire people because we've got capital under management. And if we hire more people, we don't have to sit in front of the screen and we can spend more time raising more capital. Okay. So when we started hiring people, we had to learn, we had to teach them. Okay. So if we're teaching them, we had to start them off small. We didn't start them off with their life savings or our fund's life savings. Hey, go away and learn to trade. Okay. And we found that the cheapest employees were the ones who were fresh out of university. Okay. Because they're the cheapest, but they knew the least. So to train them up, and how we're going to train you up, is we said, right, you're going to start small. We started them off with $1,000. I'm looking for my phone. I don't have it. $1,000 account. Okay. $1,000 account. Yes. Because guess what? If I gave them more money, it would have been my money I would have been giving them. I'm not going to do that. I certainly couldn't give them the funds money because they're not allowed by law if they're not trained up to trade other people's capital. So we started with $1,000. That was it, to learn the skills. The thing with trading is this, okay? Baby steps. The people who started slowly learned the most. The people who started with too much capital and didn't know what they were doing and were too afraid actually blew up, right? So, and I want you to write this down on that sheet of paper I gave you. The difference between rich and poor for most people is about $500 to $1,000 or pounds a month. It's the difference between rich and poor. It's the difference between paying down a credit card and not. $500 to $1,000 a month is the difference between that and topping up a pension or paying down your rent or your mortgage or your children's rent, mortgage or education fees. And that's what 90% of people want money for, those necessities, okay? And for that reason, it's $500 to $1,000. Now, if you've got the skills and learned the skills to make $500, you've got the skills to make $1,000. If you've got the skills to make $1,000, you've got the skills to make 2. If you can make 2, you've got the skills to make 4, and we can scale up. But we don't want to start off trying to be greedy, saying, oh, tomorrow morning I'm going to get the Ferrari. No, we want to start learn. It's a bit like learning to drive. You learn in a car park first with somebody else's car, and that's what we're going to do. So we're not going to put financial pressure on ourselves, and that way we're going to learn quicker, and we're going to make more money over the long term. Got it? The other problem is, I'm afraid people listen to Muppets. They listen to course vendors who want to charge them. I've heard fees of £25,000 for weekend courses, and they upsell you, these people, these little scam artists. What they'll do is they'll say, oh, Mr. Patel, you're not making any profits after our weekend £5,000 course. Well, if you go on the advanced course, which is 1 week, then it'll be just an extra £10,000. I haven't got £10,000. Oh, well, let's call up your credit card company and see if they'll extend you £10,000. Oh, you're still not making money? Oh, well, dude, go to the more expensive platinum course. This is what they do. All they want to sell you software and charge you every day, every week, every month. No subscriptions. Listen to that. No subscriptions. Okay? All right? Simple as that. Here's another problem we're going to overcome in this webinar. Like I said, you're wrong-footed and confused. This is a chart of euro dollar today. Right, from a little bit earlier on when I was doing the charts for this webinar, right? Now, this is what happened. I want to show you this. I want to show you this for this reason. That was a buy signal and it went nowhere. Oh, Alpesh, you're rubbish. You're showing us trades where you don't make money. We're off. Hang on, bear with me. Then look, you can see that was a buy signal, small profit. Another trade which went nowhere. Okay, this red one. Then there was this big fat profit. All right, big fat rally. And then we had the short, which I've just shown you has actually continued going in that direction. All right, where's it gone? Euro dollar. Let me bring that live and bang up to date at 7:20. All right, UK time. All right, so that's gone in the right direction from when I drew that chart. My point being to all of you is this. Hang on, trading today with, and I chose euro dollar because it encapsulates Brexit and Trump tariffs. Euro because of Brexit, dollars because of Trump tariffs, okay? So it encapsulates both those things going on in the world. 1 minute, we're going sideways. 1 minute, we're going up. 1 minute, we're having to short the market. I can't, Alpesh. 1 minute, you're saying buy. Next minute, all right, a couple of days later, you're saying sell. Can you keep on top of that? Can you keep on top of that? Plus the 3 or 4 other trades you've got to keep an eye on, plus the pipeline of the trades you're observing to get ready to place. Of course you can't, too much going on. So if we're being wrong-footed and confused, how can we use computers to remove some of those problems and make life easier for us? Okay, that's what hedge funds do. That's what we're doing. I'm going to show you the processes by which we make money, which you can copy and make life easier for yourself as well. Okay, so we're going to do that as well. And how can we keep our psychology and our mindset clear so that we don't think, oh my God, 1 minute I'm going up, next time I'm going down. We're not panicked, we're relaxed. Very important in trading because it's about your life. You don't want to be stressed out. By the way, that poll, will Trump be impeached? Yes, sirree, 22%. You ever hopeful people? No, he is the Teflon Don. All right, fair enough. Let's put another one. Let's put another question up there. You should be able to see these polls. If you can't, don't worry. Okay, I'm going to put another question up there. Hard, no deal, or what? I'm going to share the results with you guys as well. Here's another problem we're going to have to overcome and you're all facing. Okay, and the reason I'm highlighting these problems is if we don't highlight the problems you face, you're going to ignore the elephants in the room and you're never going to solve these problems. And we're going to solve them because we want to get to the end, by the end of the webinar, on how to make money and give you a clear business plan and a clear strategy. So you know what you're doing, why you're doing it, when you're trading, how you're trading, all of that done in 90 minutes. Boom. All right, so problem. You become a screensaver. What's the point? There's a lot of people out there. You know, the worst things I've seen is these courses where they say to you, oh, yeah, all you've got to do is just spend all your time in front of the screen. Another one will say, oh, just watch us trade. Look over us. And they'll send you to sleep. You're supposed to look at their screens all day long. So you're sitting there going, well, that's not how I want to live my life. You know how most hedge funds live their lives? Hedge fund managers? We're out raising capital. We're meeting pension funds. We're meeting family offices. We're having meetings. We're not sitting in front of a screen. I can get a 17-year-old. Hello. I can get a 17-year-old to do that. Speak to my intern. I can get a 17-year-old. To sit in front of a screen and place trades when I want them to, okay? So I've got to make sure any process I teach you, you're not going to be a screen slave. The other problem I often get from people is they don't know what to trade, or they're too narrow. They say, oh, Alpesh, which? Guess what? All products are not the same. I'm not talking about CFDs or spread bets or Forex or cash or whatever. This applies to right across the board. Trading sterling cable, trading cable, US dollar sterling, okay, sterling US dollar is not the same as trading, let's say, the DAX. Some things are easier. Do you know something else? And we've done research in this in my latest book, which was launched by Barclays Bank about 2 years ago. Launched it at their headquarters. The CEO of Barclays UK, Ashok Vaswani, hosted me and did a whole big book launch for me. And in that book, one of the pieces of research that we published, which I was really excited about, was when is the best time to trade in what products? Wouldn't it be useful to know that if you happen to hold a certain product beyond a certain period of time, the probability of you then making a profit in that direction has diminished? Would it not be useful to know that if you trade certain products within certain hours, certain timeframes, you're more likely to make money? So I'm going to share all of that with you as well, because sometimes people say, well, can't we just magically automate everything? I said, well, you could if everything was always the same for all products at all time frames, but it's not. So we're really going to just concentrate on a few products, okay, instruments. Some are currencies, but we're going to diversify. We're going to also look at some technology stocks, indices, commodities as well. Some people say, oh, no, I only look at gold. And I think, well, you're really narrowing the opportunities down that you're focused on. And just so you know what I'm looking at the moment, what my team's looking at the moment, okay, this is a selection I've picked for this webinar. I've created this particularly for this webinar, although this is what we're looking for. I've removed some of the things. You can see the little boxes down here just for simplicity. Otherwise, we'll have too much on the screen. So I've removed some things for this webinar. Okay, so everything from euro dollar to Tesla, because it's always good entertainment. Apple, FTSE, New Zealand dollar, Swiss franc. I know nothing about the New Zealand dollar, Swiss franc, but I'm going to show you through our trading methodologies how we're doing it. This allows me to get a big amount of choice. So what time frames am I trading? When am I trading? How do I decide what to trade? How do I know when to go long, when to go short? Let's zoom in. Okay, that's euro against US dollar. Okay, how do we know when to buy, when to sell? What if you're not at the screen? How much time do you need to spend in front of the screen? How much money can you make? Is this worth doing if you're only starting with $1,000? Okay, what are the kind of returns? When is it going to be worthwhile? Should you start with a small amount, etc.? I'm going to answer all of that. All right. One of the other key problems everybody faces, got to get rid of, you don't know when to trade. So I'm going to tell you what times we think are the best, where the trends are a little bit easier. I'm not saying you should only trade those, but when it's easier. Also, you try and second guess and outsmart the markets. That's Goldman Sachs. All right. That's the CEO of Goldman Sachs. That's one of their trading flaws, right? You don't want to go up against that. They're bound to have more information than you. And if they don't, they've got more money than you, so they can move the market. So we're not going to try and fight them. Okay, that's blank fiend. We're not going to try and fight them. We're going to try and trade alongside them. So we're not going to try and second guess the market or outsmart it. Let me say that again. That is a way you could trade, where you outsmart the market or second guess it. It's not what we're going to do. Like I said, I've got a master's degree in economics from the world's #1 university, and I'm not willing to try and outsmart all of that team, me against them, every single day. All right? Every single day, because I'd have to keep on doing it. It's not just once I've got to get it right. I've got to keep doing it. That's too much like hard work. And again, I'm going to go by something Warren Buffett said. And believe it or not, he's the one who said this famously. He said, hard work never killed anyone. You've heard this before. Never killed anyone, but I'm taking no chances. He said it. or at least he was repeating somebody. So there's a lot of different ways to work. I just don't want to work hard. All right. And if you look at why so many entrepreneurs, and I'm an entrepreneur because I set up the fund, which was my entrepreneurial business. So many entrepreneurs go into business is because they're lazy. I'm fundamentally lazy. I don't want to bloody work hard, which is what I have to do. I work for somebody else. Okay. Another problem we're going to solve, which we have to solve. And the reason I'm showing you these problems before we come to the solution is so you understand how we're doing things. Because you might otherwise say, well, why aren't we just trading before earnings results? Why aren't we just trying to, why aren't you just showing me how to read the Federal Reserve report? Yeah, okay, I can do that webinar if you want. I can do one on macroeconomics, bore the pants off you, but I can do it. Problem, you don't know how to handle losses. Most private investors have no idea. So I'm going to copy the same thing I copied. Okay, I cheated. I stole. By the way, everything I'm going to tell you in this webinar, I've stolen. I've stolen it from other hedge fund managers. Like I told you, leading traders in the world, stolen it from them. And I'm going to just share you that. That's all I did. I just, look, like anything in life, if you want to be good at something, just copy what people who are good do. That's all I did. And guess what? Unsurprisingly, you get similar results to them. So anyway, we need to know how to handle losses. So I'm going to tell you how professional funds handle it, and you can copy that methodology. All right, it's as simple as that. And I copied what they did before we set up the fund. In fact, we would not have got a pound in our fund, or a dollar, actually it's in euros, a euro in our funds if we didn't copy the same methodologies of some of the biggest funds, because otherwise somebody would say, well, hang on, you don't have the same seatbelts. Your car doesn't have seatbelts. Everybody else's car's got seatbelts. How come yours doesn't? So we copied the same methodology as controlling losses. All right. And if you want to know, cornerstone investors in our hedge funds are Aegon, the pension fund, and AXA, the pension fund. So, you know, you can imagine they're pretty conservative animals, and they want to make sure that we're doing things conservatively. So I'm going to share that know-how with you as well. The other problem is people think they've got to be right all the time. Like I said, they think they've got to be right all the time. Look at him, smug bastard. He thinks he's right all the time. I'm right. I'm always right. Okay. One time I thought I was wrong, and I found out I was right. All right. Yeah. No, look, wrong there, wrong here. Okay. Can be wrong. And I'm going to show you, it's not about being right. And if I told you any different, you would be able to check on the internet. That's bullshit, because you just check how often a hedge fund manager is right and wrong. And the internet will tell you the truth, all right? And like I said, one of the other problems is people don't value their time. There's no point in me giving you a strategy which involves you being stuck in front of the screen all the time. All right, I know you need your money for things you need, all right, and savings. Okay, let's ignore the wants. I'm not here to provide for your wants for the moment. Initially, when you're learning to trade, it's about your needs and your savings, and that's why the difference between rich and poor is 500 to 1,000 a month, and then we're going to scale up. Okay, what point is it earning 500 a month if it takes you 500 hours to do it? Because if it takes you 500 hours to do it, you're earning pretty much the same as probably somebody earns in the third world working at McDonald's. So you might as well work at McDonald's. And I wrote an article in the Financial Times about this and said for most people, because they're not doing trading effectively, they're spending so much time to earn a little bit of money that they might as well go work at McDonald's for the same time. All right. So we're going to have to make sure in our trading it's simplified and it's a lot quicker. All right. It's a lot quicker than otherwise would be the case. Okay. You've also got too many trades open, just like the broker wants you to. Never, ever, ever take educational lessons from a broker, because they're going to get you to trade bigger sizes. There's a software vendor out there who wants people to trade £3 a point. I bet they've got a close relationship with a broker. All right, £3 a freaking point. They're going to make you bankrupt quicker than Philip Green will, right? Just like the broker wants you. So we're going to make sure we limit the number of trades we've got open, and we don't trade too frequently, but equally we don't trade so infrequently that we're never making any money. And I'm going to show you which, according to our research, is the ideal sort of balance point on trading. I'm just keeping an eye on some of these markets as well at the same time. The Dow. Okay, I know somebody said S&P, but I'm keeping an eye on the Dow. We've got a really old long position from the Dow since 3 days ago, and it's been going gangbusters. So I just want to show you that in a second, but I'll show you that later. Okay, so you got that. You're being too greedy, and you don't realize it. All right, because you got Muppets showing you, you know, pictures of their big house with pillars and blah blah blah. Let me tell you something. World's second richest man, Warren Buffett, still lives in the same house he did in the 1970s. All right, you try and be greedy with the markets, and we're going to rip you a new one. We'll take the money off you. You start getting greedy with the markets, we'll say, we know you're holding on too long, and you shouldn't be, and we'll just take that money off you. All right, so when you got Muppets showing you their big old houses from selling you overpriced courses, But funnily enough, they never manage other people's money as fund managers because nobody would trust them with it. Right? You're getting screwed. All right. So we're going to make sure. I'm going to tell you the exact opposite of what everybody else tells you. I'm going to start off with demo accounts. We're going to start off with $1,000 brokerage account, not millions. All right. Because baby steps is what's going to get you a return. All right. But not just that. Most private investors, they don't know when to take profits. Right? They're too scared, so they take them too quickly. So we need to know, we need to find a way where we can be relaxed and calm, and we see those profits and we think, you know what, I'm gonna be relaxed. I know exactly what to do. I know exactly what to do, and that's my job, is to make sure you always know exactly what to do with those profits. But not only that, yet another problem. Now you think, Alpesh, thanks very much. 101 problems you've given me. No, I'm going to solve them all for you. You don't know how to get the big home runs, even when you're right in a good trade. You see a good trade, and guess what? You don't know how to make the most of it. So I'm going to show you when to put your foot on the accelerator and when to press the brake. Okay, exact point. So trading becomes a lot easier. It becomes a lot less stressful. I'm going to end this poll on the hard deal Brexit. This sums it up, doesn't it? Will it be a hard no deal Brexit? 50% yes, 50% no chance. Well, isn't that just everything at the moment? All right, that's exactly what it is for everybody and everything that's going on. So I'm going to get rid of that poll for a second. We'll come up to more polls in a moment. The other problem we're going to overcome, I'm going to talk about this at the end, is you don't know how to get a good broker or to manipulate them. So I'm going to discuss the brokers and how to manipulate. I'm going to tell you brokers, not one, but brokers that I like and trust and use. Okay, but even then, trust, always trust carefully. All right, I always like to meet the CEOs and so on. So let's get to the solution part. Let's get to the answers. Let's get to the business plan.